Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Lilquist, always bringing you the do's and the don'ts of the financial markets, stocks, options, futures, Forex, income strategies, and 401k or IRA strategies. In this segment, we'll talk about income strategies by using the market. But if you missed seats for that free investing class that we had a lot of people texting into on the last segment, congratulations. You know, Al, one of the first things, I talked about this the other day when I was teaching one of those investing classes. Sometimes the hardest thing for people to do is take action and make that first step, especially in their financial goals. So when people are thinking about their financial goals, don't always think, "Oh, I'll do it tomorrow," or "I'll do it the next day." Anytime, if anybody has ever done a retirement calculator, the longer you wait to try to make a change in your financial future, the harder it is later on in life.
Yeah.
So now is always the best time to do that. So just text the word investing to the number 210 for 2 seats for that investing class, and see what the opportunities are. If you have goals or objectives with your family or future, why not see what those are?
Yeah. We talk about this maybe not being the right time. I'm going to wait. I can't tell you how many people we have coming into these classes that say, you know what, I years ago I thought about doing something, and then I thought, you know what, I'm just this isn't quite the right time. I'm really busy now. I'll wait and do it later. And all of a sudden they're close to retirement or in retirement, and the money isn't there, and
Yeah,
they're scared, and they're they're at a point where we still can help them, but what you have to do when you reach that point is maybe do some things that are different than what you've done before that
yeah,
haven't worked for you. Uh, it's a sad thing. It's very frustrating to see this happen when people could have done something. You could have taken action, and
yeah,
there's a lot of things that you can do where you can say, I'm going to wait until tomorrow. I'm going to wait until next week to do it. I mean, if I and during the summer, if I decide to not cut my grass today, the grass will still be there. The yard will still be there tomorrow or
correct.
next week. If I want to go fishing and I decide not to go today, the fish will still be in the lake tomorrow or the next day. But if you miss out on opportunities in the markets, they are gone. Once they're gone, they're gone. And you know what? If you don't take it, somebody else is going to take it. There is somebody out there taking those opportunities that are being presented to you on a regular basis.
Yep.
If you're not taking advantage of them, it's probably because you don't know how. Maybe you're a little afraid to dip your toe in the water and get started. That's what we do. We show you how to use the markets to your advantage and how to do it in a way where, and you mentioned patience,
Hmm.
waiting. Why would we want to wait to get into something? Well, we do that because what we're looking for is a position or trade or investment that gives us the greatest probability of it working with the greatest profit potential and the least amount of risk.
Yep.
You don't have to make a trade every day to be successful. The
Correct.
successful people out there, even people like Warren Buffett, will tell you that one of the attributes that will make you successful is patience.
Exactly. Yeah. And you mentioned, it is springtime and you got people are excited to cut the grass myself. And I know, Al, let me ask you this question. Do you have your New Balance shoes and your jean shorts and your polo shirt? Are you ready to go cut the grass?
know, I have items similar to that, and I'm ready to go.
If anybody knows what I'm talking about, you're probably laughing right now. But, just another comment on that too is because, sometimes people say, well, I'm going to wait until I have more time in retirement. Well, that's too late, right? You have to be able to do that ahead of time. Like you said, I shouldn't say it's too late because you can still do it, but why not have a better opportunity when you do that?
Yeah, the last thing you want to do is wait until you actually don't have any time left.
Exactly. Just like get an umbrella. You want to have an umbrella before it starts to rain. So we talked a little bit about Intel last week, Alan. I just want to bring that up because I'm going to bring Intel up, and then I want to talk a little bit about Caterpillar.
Hmm.
And I want you to dissect this a little bit. So last week we talked about a buying opportunity, a long position in Intel, where price was about, I think it was about $3 higher than it was at where we wanted to get in.
Hmm.
And the price still has not got down there yet. So when I made a comment earlier, when someone says, hey, what are you going to do with the market? You going to buy or sell it? Nothing. But I'll tell you what I'll do when it gets to this point. Just like Oracle, I'm not going to go buy or sell Oracle right now. I'm going to wait till price gets down to that demand zone that we talked about and move on. But
Hmm.
the great thing is you can set all this up ahead of time and wait for that to come to you. The computer will actually execute that for you.
Right.
So the time aspect for people is it's irrelevant because you don't have to be at your computer for that to execute. Now, going to Caterpillar, this is another. It's an income opportunity, a strategy to get into Caterpillar, and it's a short, and it's a monthly opportunity, which means it's a larger time frame. So people that have busy lifestyles and work 10, 12, 15 hours a day every day of the week, there's ways to use the market on a larger time scale.
Right.
And this is a short and Caterpillar. So just explain how that helps take the emotion away, but also that gives you not this or that. How about your job and trading and investing?
Right. You started out the first segment talking about freedom to be able to do what you want to do when you want to do it. Oftentimes, let's be honest, that takes extra money to do that. And the people that are really enjoying their life and have the freedom to do what they want typically have multiple sources of income, not multiple jobs. We talk about this every week. The markets provide multiple additional sources of income. We're not telling you to quit your job. Don't do that. But that's one source of income that you're counting on now that has helped you get to where you are. But if there are things that you want to do that maybe it's a little, your money's a little bit tight right now, then maybe look at generating income from the markets. Josh is talking about Caterpillar as being an income opportunity. What that means is that it's something that you can get into and out of in a short enough period of time so you can use that money now. If you're looking for additional income, that means that it's not something you hold on to for decades, which is typically what Wall Street is putting you in, that buy and hold strategy that where you're agreeing to hold on to something. Now, when Josh is talking about a shorting position, a short position in Caterpillar, that means we were looking at benefiting financially if it goes down in value. We're assuming it's going to go down in value. Why? We're assuming that because we've identified an area where the institutions have shown us that that's where they want to sell. So one of the things that will result in you having confidence to be able to do this and put a trade together is that we're going to show you how to identify on a price chart where the institutions, the big players that are investing not thousands of dollars or hundreds of thousands of dollars, but they're investing hundreds of millions or billions of dollars in a position or taking that out of a position. That's what causes these turning points in the market. That's what causes the movement in the market. And we're willing to wait because the institution, they have shown us where they want to take action. They've shown us that. And when they do that, they are also showing us when they're going to take action in the future. That's where we want to be active, is when they're doing it, because they're the ones that move the price. And by identifying those areas, that gives you the lowest risk entry point with the highest probability of it working with the highest profit potential. Those are the components that you want to have in a trade. And the number one thing, regardless of whether you're looking at trying to benefit if the market goes down or goes up, is protection, is making sure that you know how to, this may sound strange, but know how to lose. Nobody's going to be right 100% of the time. So when you're wrong, be wrong in a way that really doesn't impact you. That means having a very small loss, which can never become a big loss. All of the pros out there will tell you the number one thing that they concentrate on is protecting their assets.
Exactly. If you can't keep your money, you can't grow it. And that's the key. And you really dissect that. I know that's a big topic in your investing classes. People associate risk with being scary. Well, why not minimize that risk? Keep it very, very small. Your winner is much higher, so that way you don't even have to be right every time. So that brings the confidence like you were talking about earlier. And I know for people that are watching the YouTube stream, it's a little bit easier to work kind of following along on the price charts and stuff. But just to be able to illustrate that, that's why we have these investing classes here locally in Bloomington. And these are classes where we've taught thousands our different strategies to make smart investing decisions. So to get into one of these classes, we do these during the week and on the weekend, just text the word investing to the number 210-210. That's text investing to the number 210-210. Now, anybody that knows Caterpillar, Al, may know that Caterpillar is at roughly about 220, 222 per share, which might be out of some people's leagues. Because say you want to buy or short 100 shares of that, say you want to buy 100 shares, just to make it easy, you're going to need about $22,000 to do that.
Correct.
I want you to talk about two assets that allow people to use much less capital, especially much less than $22,000 for an income strategy.
Yeah, and that is one of the problems with the stock market, and I think this is one of the things that has kept people from participating in the stock market is the cost. a lot of companies years ago, back I was a broker years ago, and back then when we saw a company approach the $100 range, we knew that there was going to be a split. They would almost always split their stock before it reached or when it reached that point. Now we're seeing some companies that will trade in the thousands of dollars a share before they will actually think about splitting. So how do you participate? If you're looking at a stock that maybe costs $200 a share, are you going to buy one or two shares and think that you're going to really get a decent profit from that?
Yeah. So what are the two assets that allow people to use less?
One of the things that you can do with a company like Caterpillar or any high price stock are use options.
There you go.
You can use an option and actually participate in 100 shares. Each option contract, which you trade on something like a stock, let's say Caterpillar, for example, each contract controls 100 shares. So you can control 100 shares of Caterpillar. Maybe you can do that for $300-$400. There are different components of an option, which we'll talk about and teach you in these classes, but there are different price levels. And you can kind of choose actually what you want to pay for the control of 100 shares of Caterpillar or whatever stock you're looking at. Most of the decent companies that we would want you to trade have options that trade on them. So you can actually participate for a fraction of the amount. Now, let's say Caterpillar goes up 10%. If it does, most of the options that are available are going to be up somewhere between 100 to 200%. So you get a huge advantage from a return standpoint, rate of return standpoint, but you can also participate in these companies. What you really want to be able to do to benefit in the kinds of markets the kind of market conditions we're seeing now, or identify the companies that have decent movements up and down. That kind of volatility is really what helps us with some of the assets that we show you how to trade. This is a great trader's market. We talk about the difference between buy and hold and trading. Most financial advisors are going to put you into a portfolio that you are basically agreeing you're going to hold on to during market crashes, bear markets, and just hold on to it for decades. They're going to say you're in this for the long term. It's time in the market, not timing the market. What we're showing you how to do is you can still, with your long-term portfolios, have something that you hold on to, but we'll show you how to manage it. So you eliminate the big losses that you go through. If you were a buy and hold person and you had a portfolio in 2022, you were probably down 20 or 30%. If you were in the market back in the 2000s, in the year 2000, you were probably down 50%. In the year 2007 to 2009, you were down 57, almost 60% if you were holding something that mimicked the S&P 500. Those are big drawdowns. You don't have to, even if you're holding a portfolio long-term, you don't have to let that happen to your portfolio. We'll show you how to use protective measures so you make sure that if there is a major downturn, you're not participating in a bad way. We'll actually show you how to benefit in those market directions. So in the year 2000, late 2007 through the beginning of 2009, the S&P 500 was down 57%. Well, there were people that made 50, 60, 70% during that time period. You don't have to write it down if you will just take a little bit of time to learn some of the strategies that are available to all of us to use regardless of what's happening in the market.
Yeah, and that's the key word is these different strategies. Each strategy is a little bit different based on what you want to utilize the market for. You were talking about options, which basically, in a nutshell, you can buy stock at a discount.
Yeah,
use much less capital.
Right. And the other thing, look at Caterpillar here for a minute. We're talking about patience waiting for Caterpillar. There's a way of getting paid to wait until it comes to the price you want to get in.
Ooh, let's
with
talk
options.
About that's a good teaser. Let's talk about that in the next segment, how to get paid to wait. But we have these investing classes to introduce these new concepts to people. And quite frankly, they're not new. They're just a little bit different. So text the word investing to the number 210, 210 for 2 seats for this investing class. Text investing to the number 210, 210 for 2 seats to see what options are, see how to buy stock at a discount, see what that strategy is. Coming up next, we're going to talk about Oracle. As Al said, we're going to talk about how to get paid to wait, the strategy for that. This is Josh and Al, Investing and Trading Live. We will be right back.